Welcome to Cyclical Tuesday. This is Fed Zach, Senior Trading Strategist here at CMTrading. Did you know the markets have cycles? But before we start, make sure to smash that like button, share, and do subscribe, especially if you find value in this presentation. And I've said it many times again, we appreciate and thank you in advance for sharing it because it does help our channel grow. All right, so let's break it down. Yes, the markets have seasonal cycles. Not only do the markets themselves have, but underlying assets based on their characteristics, based on time of year, have either more demand or less demand, but depending on what we're trading, all right? So let's break down some of the more famous ones, all right? So here we start with President-elect Donald Trump, who's going to be taking office January 20th, I hope. Let's see if it does happen. They want to curtail him in court, but let's see if it does actually frustrate. But in any event, what are the presidential cycles that happen in the markets, all right? So historically speaking, okay, in general, these generalizations are exactly that. They're generalization and historical data. You can't argue with it. And it also depends on the time of year, but all in all, they are relatively very relevant and cyclical, right? So what happens during a presidency? First year, pretty strong year. Second and third year are relatively, compared to the first year, weak, and the fourth year is generally speaking strong as well. So we could look forward to perhaps a very strong market going into the first year of Donald Trump's presidency for the second time. All right, so let's break it down when it comes to the stock markets. What are the cycles, right? So December historically was some of the best times for the market in the US, okay, where the markets go the highest. Guess what's the worst month? September, October-ish time, and historically speaking, most of the crashes happen during that time, all right? So with that said also, the S&P 500 also has its own cycle. If it's strong in January, most of the time it's strong throughout the year. So that's something to look forward to this January as we're breaking down the stocks. Well, not just the stocks markets, not just the presidency has cycles, but also, obviously, commodities, right? If you are someone who lives in the northern hemisphere, which is most of the population in the world, oil has much more demand during October, September-ish time, okay, as we're going into the winter months. And if on the flip side, okay, if we look at gold, gold generally bottoms out in August. Copper generally rallies between January and February, and wheat actually, generally speaking, rallies in August, September-ish time as the harvest comes to an end. So these type of nitbits are something to keep in the back of your mind. It doesn't mean that every year we're going to follow suit and we're going to do exactly this. But if you do see the cycles happening again and again, it's really because the markets are just trading based on our behavior. And our behavior is pretty much predictable based on winter, spring, summer, and fall. It's just that simple. Thank you for joining me for this Technical Tuesdays. We'll see you here next time.